Hey everyone, welcome back to Corporate Decoder, the place where we untangle the wild world of corporate filings, and sometimes things are not what they seem. Today we are diving into a very specific kind of report from OneIM Acquisition Corp. It is a current report filed on a Form 8 which tells us about some pretty important events happening right now for the company. So what is the big news here? Well, in simple terms, this company just had its very first public sale of its shares. It's called its initial public offering, or IPO. Imagine a private company deciding to become a public one selling pieces of itself to anyone who wants to buy them on the stock market. This report tells us exactly how that went down and some of the immediate financial consequences. The key date here is the 15th of January 2026, that is when OneIM Acquisition Corp officially became a publicly traded company. They offered up a lot of their units. Now, what are these units they are selling? Think of them as a package deal. Each unit you buy gives you one share of the company's stock called a Class A ordinary share, and then a sixth of a redeemable warrant. A warrant is basically a coupon that lets you buy more shares later at a set price. So for every 6 warrants someone holds, they could buy 1 full share. The stock itself, the symbol you would look for is OIMO, that is for the units. The common stock, that is the IM code, and the warrants, that is OIMO, these are all trading on the Nasdaq stock market, LLC. They sold a massive 28,750,000 units. That is a lot of pieces of the company being offered up. And they did this at a price of $10 per unit. So if you do the math, that is a huge amount of money, $287,500,000 in total money raised from this IPO alone. This is the initial funding that the company will use to operate and grow, but that is not all. At the same time, they also did what is called a private placement. This means they sold 200,000 more units, but not to the general public. These went to the company's sponsor, which is an entity called OneIM Sponsor LLC. These private units were also sold at $10 each, bringing in another $2 million. So in total, they brought in a very substantial sum of money right from the start. All this money from both the public offering and the private sale was put into a special trust account. Think of this as a secure vault specifically for the funds raised during the IPO. This is very common for companies going public, especially special purpose acquisition companies, or SPACs, to ensure the money is protected and used for its intended purpose. A total of $287,500,000 was placed in this trust account. Now, the really interesting part financially, since we are talking about a company that just started selling stock, is seeing exactly where that money landed. The report mentions an audited balance sheet as of the 15th of January 2026. This is basically a snapshot of the company's financial health right at the moment it went public. It shows what they own, what they owe, and the money they just brought in. We can see here that the company received the proceeds from both the IPO and the private placement, and this is documented. The core thing to look at here is what this initial influx of cash looks like on their books. It confirms that $287,500,000 raised from the IPO and $2 million from the private placement are now accounted for as assets. This is the starting point for their financial journey as a public company. It is essentially all cash and equivalents at this stage because they are brand new as a public entity. This audited balance sheet is filed as Exhibit 99.1. It is the single most important financial document in this filing because it represents the capital base from which the company will now operate. Now, looking at the people behind this filing, Gregorios Kapanis is listed as the Chief Financial Officer. It is his job to make sure these numbers are right and the company is managing its finances properly. So what does this all mean for OneIM Acquisition Corp? Well, on the surface, everything looks like a textbook successful IPO. They raised a significant amount of money right off the bat, indicating investor confidence. The money is safely tucked away in a trust account, which is standard practice. The main strength here is the capital raised. This massive influx of cash gives them the resources to pursue their stated goals, whether that is acquiring another business, as is typical for acquisition companies, or investing in their own operations. The clear separation of funds in the trust account also signifies good initial governance. However, with any new public company, especially one that is basically just starting out, there are inherent risks. The biggest unknown is always what the company will do with this money. Will they find a good acquisition target? Will they execute their business plan effectively? Their future success hinges entirely on the decisions made with this newfound capital. There is no operating history as a public company to analyze, yet no established track record of profitability or growth to scrutinize. The warrants also represent potential future dilution if they are exercised heavily, which could impact existing shareholders. In conclusion, this filing marks a significant milestone for OneIM Acquisition Corp. It signifies their transition into the public markets with a strong initial funding position. The company's direction now depends heavily on strategic execution and prudent financial management. It is a fresh start, and the real story of their financial performance will begin to unfold in subsequent filings. Alright, that is our breakdown of OneIM Acquisition Corp. IPO report. What is your take on this initial financial health and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.